Joining us for more on the global picture is David Malpass. He's president of the World Bank. President Malpass, it's good to have you on board. On this day where the S&P closed at a record high. We talk a lot about the weak dollar. What do you think that is a reflection of right now?
Hi, Sarah. If you look at a longer-term graph, it's more in the mid-range of where it's been over the 5-year period or over longer periods. So I think what it's reflecting right now is just some signs of growth outside the U.S. So that's good. If other countries are growing, then their interest rates won't be as negative, or they can move into maybe positive territory, and that strengthens their currencies against the dollar. So I'm not so concerned about that. And strictly from a developing country standpoint, it's okay for the dollar to weaken. It gives them some chance to begin a recovery. Remember, in the 2000s, the 2002, 3, 4, 5, the dollar was weakening at that time, and that was actually a good period for developing countries. So I think the dollar is okay. The bigger issue is just the depth of the recession.
So on that point, you seem to suggest that we're going to recover at different speeds around the world. Can you get into that a little more as far as what parts of the world are going to recover first and fastest, and how long it'll take for the U.S.?
Yeah, that's an interesting, that's a good question and issue. Well, the U.S. has shown some stabilization after the very sharp fall off, but we're seeing data, there's a little bit of a disconnect between the data that comes out and the forward looking. So the UK has reported very weak data, which is a backward looking quarter. As we look forward, I think you see some stabilization in the U.S., which is good. Europe is picking that up some, and Japan certainly picking that up a little bit. And China was already in I think a stabilization mode, say in April and May. And so that's good, because these are the bigger economies the biggest economies in the world, with the U.S. and China being quite a bit bigger than the others. And so that gives you some hope, but the reality for developing countries is still the weakening phase is still ongoing.
To what extent, David, can that be fixed in the short or medium term? And what do those developing economies need to see in terms of help from developed economies?
That's what we work on every day. One of the things is the immediate crisis. So trade finance got cut off as the pandemic hit. That means the ability to do any short-term financing of imports and exports. So the World Bank has been able to step into that. We're helping with digital connectivity. Countries need to be, even the poorest countries are trying to be online or in connection with the rest of the world. So there's some help that can be done in that. And working capital for companies also is important. So we're talking about the short-term financing end that allows people to have inventory and to have accounts receivable. Those are very important, and we're able to help with those. The longer-term issue is, how do you allow capital to move to new sectors within your economy? Let's say you were an economy that was heavily involved in tourism. That's hard to bring back very quickly. So what else can people do? How can you stabilize the agriculture system? Those are some of the, and of course the electricity sector and clean water become very important problems in a recession.
We're still seeing some pretty heightened trade tensions between the U.S. and China. Just saw a headline go by before the close. State Department asked colleges to divest from China. It's part of this growing drumbeat. The ban of TikTok and WeChat, the ban on Huawei. Do you think that the standoff between the world's two biggest economies is impacting the speed and the size of this global recovery?
Well, fortunately, both. Well, China has I think started growing again, and the U.S. Will probably show that in some of the data going forward from a sharp decline, some growth, and so I think the bigger long-term issue is what's the best way to have supply chains connected. Yeah, I think my view is maybe that connection of supply chains had gone too far in the past, and so then you begin to sort that out, which is some part of the process that's going on. Also, I think the two systems are very different, and so there needs to be exploration on how they interact. But for the World Bank, we work with substantially with both. The U.S. is our biggest shareholder. China is the third biggest shareholder, and so we try to work with both in terms of how do you get the best growth for developing countries. One of our big activities, or one issue that we're working on now, is to have more transparency in the debt relationships that countries have with the developing world. Those had become non-transparent, and I think it's important to bring back a lot of transparency in those relationships.